on the board of Lyft.
Yes, you did mention that.
And there's been a lot of questions about all sorts of, about Lyft and what's happened to its share price, about the Uber IPO that's coming. We just reported yesterday WeWork is coming in terms of IPOs that are on board here, and what the market's really thinking. Were you surprised at what's happened to the stock price of Lyft?
Actually, I don't try to predict stock price at all when I think about companies and their futures, and I think the company's absolutely doing the right thing. Their heads are down. They're focused on the operations of the business. They're focused on delivering for customers and improving their service. You know, transportation as a service, and Lyft is the first one to go public, and it's a brand new category. So there's a lot of investors that don't really know what that category is going to mean. And it's early days. There's less than 5% usage in the United States for ride sharing today. And we're kind of end to end. We're doing, you know, scooters, bikes, cars, et cetera.
Do you look at this IPO as a success?
Yes,
do you look at it as a failure? Do you look
No, I think it's totally a success. I mean, the
the pricing of it is a success? Because if you were an investor at the IPO price, you're not a happy person.
Well, it depends on how long of an investor you are.
Right.
And if you want to flip it, immediately, that's a different story. But I think we priced it right. I think we had very good momentum for the IPO. We raised the appropriate money that we were looking to do to help keep the company healthy. And we look at this as a marathon. It's not a sprint.
Let me ask you a different question then. When you look at the price of Pinterest, or you look at the price of Zoom after their IPO, went up 80%. You look at that as a success, or is that a failure? Because they both can't be a success.
That's not true. I think they're both successes in different ways. We're a very different business model. We are a capital-intensive business. We have, thousands and thousands of drivers that are independent contractors that we work with. We're a big scale business, and we're also expanding into markets. So I think you look at the combination of what we're doing and how we're doing, and you look at our growth rates, which are really strong and continue to be. And I think you will find that we priced appropriately, and it will be a good outcome for our investors.
Your point is the right one, that it's a long haul.
It is.
If you're a long-term investor, it's a marathon. Do you own shares in the company?
Yes, I do.
And you plan on holding them?
Absolutely.
Well past the lockup dates or anything that are there?
Absolutely. Yeah.
One of the questions I think people have about ride sharing, because it doesn't just apply to Lyft, but I think applies to Uber as well, is sort of what is the ultimate path to profitability? Because nobody talks about profitability. Neither company fundamentally says in the next 3 years that there's, a target date on when we're going to become profitable.
Yep.
How do you think investors should really think about that?
Well, I think in any circumstance, what you have to do is the trade-off of taking money, reinvesting it in the business to have it continue to grow. And when you're in a land grab environment like we are, and we have been number 2 in the marketplace in terms of our position, we have to invest, and we have to do it wisely and correctly. But we also have to be fiduciaries. And I chair the audit committee at Lyft, and I look at the numbers all the time, and I work with the teams all the time, and I think they are doing the right things to manage their costs, to have the visibility as to where they're headed, to do it right, and to make sure they take great care of customers and build that loyalty, because that's what's going to be important in the future.
Maybe Lyft is one of the sort of points that you can put on the map in terms of how you're thinking about the economy right now, but are you seeing an uptick in business as a result of the fact that it looks like our economy is doing better than we thought?
Well, I think the economy has been strong over the last several years, and I think Lyft, as well as a lot of companies, are riding that tide. I also think that there's been a shift in momentum in terms of how people think about their cars and how they think about driving. Cities are really crowded. We also look at the fact that there's a lot of people that drive for Lyft, that this is a second income for them. And it's a way for them to make ends meet. So there's a whole combination of different changes that have taken place. The other thing is we live in a country that's very safe compared to how it used to be. So there's a moray that allows people to get into cars with others that they don't necessarily know. And we do a lot of vetting on that to make sure that those are safe rides. But I do think this paradigm shift has really been an opportunity for Lyft to capitalize on that and to really provide services that make a big difference.